right, everyone. We'll get started in just a minute here. This is the Climate Tech Finance webinar by Open Grants. And so for those of you just joining, welcome. We'll get into some of the details and specifics in the moment as we get all spun up here. So welcome, everyone. My name is Sadel Turbovsky. I am the CEO and co-founder here at Open Grants, and this is the webinar about climate tech finance, which we're super excited to have Tamara here. And we are going to dive into this in just a minute. But while folks come in and get all squared away in the webinar front, just wanted to share a few housekeeping things for everyone's convenience and comfort. We do have the chat disabled, so please use the Q&A tool to ask us any questions that we have. This webinar will be recorded, so if you have to leave early or simply are unable to attend, we will be recording this and posting it on YouTube, as well as on our blog, so you can catch it there. And as I mentioned, my name is Sadel Turbovsky. I am the CEO and co-founder here at Open Grants, and Open Grants is the easy way to win grant funding. So we are going to have a really cool fireside chat today with Tamara Coney from Climate Tech Finance. And Tamara, I'm just going to go ahead and let you introduce yourself, a little bit about your background, and we'll go from there.
Good, yeah, thanks, Fidel. Thanks, everyone. Thank you for joining. My name is Tamara Coney. I am the lead on Climate Tech Finance program within the Bay Area Air Quality Management District, mouthful of words. For those of you who are not familiar, the Bay Area Air District is the local air district within in San Francisco Bay Area, overseeing 9 counties and protecting the air for local residents. And I joined the air district 4 years ago. Sorry, time flies. And prior to joining the program, I worked at the state level at the California Air Resources Board on the emission inventory and toxics control. And before that, I had an internship at the Governor's Office of Planning and Research. My educational background is environmental economics and policy from UC Berkeley. And originally, I am from Belarus, so I came to California straight in 2011. So I'm excited to be here. Thanks.
Awesome. Thank you so much for joining us. And yeah, we're really excited to have the benefit of your experience and expertise today. So I wanted to just start out with, Climate Tech Finance, this really cool program from the Bay Area Air Quality Management District. But I didn't know about Climate Tech Finance really until I met you. So would love to hear just like, what is Climate Tech Finance? Who are you?
Yeah, so the program is originated within the Bay Area Air District. About 5 years ago, really the thought was going, how can a district be more involved in the climate space, considering we are so close to the Silicon Valley where all the innovation is happening? Felt like the air district and government in general is the last to know about the cool, innovative tech that's happening. So we wanted to be engaged in the space and also help accelerate the development of those technologies so we can speed the adoption of those within our communities. And the air district started looking for various financial tools that could help companies. And the one you're very familiar is grant funding, but that requires a lot of admin on our end, and that just, we already have enough of some of the grant programs, so they wanted to explore some other tools and start looking at various partners who we can engage for that. And we came across IBank, which stands for California Infrastructure and Economic Development Bank. They are part of the GOBIS in Sacramento, and they have a loan guarantee program for a number of decades already, helping small business get their loan with the support of loan guarantee. And we like that tool because we could rely on their financial diligence, since none of us really are lenders, none of us really have a strong background in finance. We decided to partner with them on climate tech finance program. So it is really a program between the two entities. The Air District, where we do the early outreach with climate startups. We do the technical diligence, in short, verify that they indeed reduce greenhouse gas emissions. We assess social equity of this technology on local communities. The IBank side really provides the loan guarantee tool, which helps de-risk the loan. For those who are not familiar, loan guarantee is kind of like insurance on your loan, and the current terms that the IBank provides is 80% of loan guarantee and up to 5 million. So we could do as little as 500,000, we could do 1 million, but in this case, not only 800,000 will be guaranteed. The loan itself could go up to 20 million, but in this case, the loan guarantee is only 25% because it maximizes at 5 million. Happy to elaborate more, or if there is.
No, that's great. I really appreciate it. And so I want to zoom in on a couple of concepts here. One is, and I'm sure this will be a question, so I just want to ask you know, this program is out of the Bay Area Air Quality Management District. For those of you who may not be aware, the state has a variety of air quality management districts. I just wondered, is this program, Climate Tech Finance, available outside of your jurisdiction in terms of the air district's kind of reach?
Yeah, good question. We started originally just focused on the 9 counties, and that is a bit challenging because, again, air travels, climate is a global issue. We can't just be like, sorry, you're just outside the boundary. Luckily, IBank have received more funding from federal government last year, and we were able to expand the program statewide. So we did outreach with other air districts. Some of them were, and there was 35 air districts within the state.
Yeah.
Some of them, it's about the same size as we are. Were interested, but just didn't have resources because our program is self-funded, so it's funded by our general fund within the air district. And we engaged with them on pipeline sharing, but referring deals if they hear of some, let's say, South Coast hear of some deals happening in LA region, but they didn't quite have the capacity to expand it to the level that we've already been, and IBank was comfortable with us operating statewide. So we are supporting entrepreneurs throughout the whole state, as long as they have the proceeds of the loan will be spent within the state of California, they qualify for the program.
Very cool. So statewide, it's available across the state. It's a loan guarantee program, which I would love it if you could explain like the mechanics or like what maybe a use case of a loan guarantee, because I think it's something that folks don't maybe run across, especially entrepreneurs. And so would love if you could just like give sort of like loan guarantee 101, like what is this thing that you offer?
Yeah. So we don't offer direct, when people hear loans, they're like, oh, you give loans. No, we don't unfortunately give loans ourselves. So it is an insurance on that loan. So technically, this tool is for lenders because they are the one who will be providing loans for a particular company. The way it works is the companies still have to be in a right stage to receive, to qualify for a loan. Ideally, they need to show at least to show a clear path to profitability. Banks love if companies generating revenue already, so they could show how they will be paying off that loan. But when banks are not super confident on the financing and also technology side, that's where this loan guarantee helps because it de-risks 80% of the loan, and our in-house assessment de-risks the technology where they might not know how to fuel cell works and whether it's going to scale or not. While we, with our technical expertise within the air district, can verify that it is a viable technology. It's already been deployed in a number of applications before, and we stand by it. So lenders feel a bit at ease lending in this case. But yeah, it's really, at the end of the day, if everything goes smooth, loan guarantee is just help unlock that first loan for the company, and then they build the good track records with the bank where they pay that loan on time, and they could qualify for a second loan, maybe without a loan guarantee. And we've seen that happen with some of the companies who've got the first loan guarantee from us.
That's awesome. So this is a program that effectively just makes you more fundable, right? As you're going through that criteria with whoever your lender is, bringing a loan guarantee to the table makes the deal more attractive to that lender. Awesome. Yeah, I mean,
in current economy, it is very appealing because lenders would like to be on a hook for as little as possible. So
yeah, it's a great way to help mitigate uncertainty, which is a big part of just the reality of a lot of this technology and so on. So that's awesome. Well, I love that this is available. It's a really cool program. Do you think, can you give some examples maybe of folks that you've helped secure loans and like what that process was like for them? And in general, I'd love to hear kind of like, what's the time frame look like? When should an org reach out to y'all? And how long does it take for them to, come away from that conversation with, oh, now we have this loan guarantee that we can then add into this deal that we're working on?
Yeah, no, in terms of the successful pipeline, we funded 15 companies, total of 37 million so far. Some of them were also loan renewals where they received the first loan, they used it, and then they recycled the loan guarantee for the second one. Technology-wise, it varies as long as they reduce greenhouse gas emissions and don't rely on fossil fuel. That is something we will support. We have a huge pretty big pipeline in energy space, mobility. We funded the microgrid providers at public facilities. We funded the hydrogen ferry. We funded an ultracapacitor developer. We supported the EV charging software provider. So we really try to be as technology agnostic as possible in the whole climate tech definition. And the second part of your question was like the timeline. Yeah, the timeline really varies depending on what stage the company is. We never really say no. We say maybe not yet. We're happy to have a conversation with climate startups in various rounds. Like if they are just in the pre-seed or seed round, because we believe we won't go away for a while. We have enough funding to continue support climate space. And I love seeing companies that I talked to 3 years ago, and they were just building their first prototype. And once we introduced them to lenders, the lender was not quite maybe excited because they wanted to see the technology operate for some time before the lender could really get behind it. And now they circle back to us. They've completed their first prototype. It's all went well, and they've received contracts to expand. So if the company know that they are ready for a loan and maybe started the discussion with lenders already, and those discussions have been going well, our approval process could be done within a month. What we started doing recently, considering we have a lot of interest in just 2 staff, we started pre-approving companies early on, saying that they qualify for the loan, qualify for the program. From what we've seen so far, they seem like a good candidate, and we send them a letter that they could take to lenders. And once they got a bit more traction with in lender community, that's when they can come back to us and say, hey, this bank is underwriting me on these terms, and we will do the full assessment that I mentioned earlier, which includes the greenhouse gas analysis, primarily scope 1, and social equity analysis of the deployments.
Awesome.
Yeah. All in all, it's like, in general right now, to get a loan, it's probably about 6 months, because we recommend talking to as many lenders as possible, trying to get the terms you want, but it's also not as straightforward at this time right now.
Yeah, no, that's really good to know. And so it sounds like the pre-approval process could be as quick as like a month, though, that like initial engagement. And then, obviously the full approval is really contingent on the timeline of like the financial institution that you're getting your loan from. What are there any so in venture capital, when you're looking at VCs, they're often making a decision based on kind of scarce resources, right? So they have, they're deploying X amount of money from their fund, and so they're prioritizing certain projects over others. As you look at approving deals and loan guarantees, are you pursuing a similar process? So how are you evaluating opportunities? Are you saying no to certain loan guarantees based on certain factors that are outside of kind of just fundability from a lender's perspective?
Yeah, I think we're in a really lucky position because we work for government. So the core mission of the program is to help entrepreneurs, and we don't disqualify anyone based on, let's say, the number of greenhouse gas reduction. So we don't prioritize like, oh, they work in cement, therefore they will reduce more. Let's push them further than someone who is maybe installing heat pumps in residential homes. We try to help everyone, and we prioritize it, I guess, based on whoever is further in the lender discussion. If the lender says okay to the heat pump installer, for example, or we will be approving them first. But in general, we try to be like whoever submitted the application first, make sure no one's kind of lagged behind. And I guess something that would not qualify is we try to look, as I mentioned, on what is the effects of this technology on the local communities, and if certain product is really just out of the scope for most of your population and maybe not necessarily that needed per se, and I don't want to say there is bad technology. There's but if this technology is just pure for the rich people, we might ask how would general public have access for that, and if there is a not clear way, like this is only going to be used on the private golf somewhere out there, we might not approve that just because it doesn't fit our social equity lens. But yeah, as long as the technology don't rely on fossil fuel and not outrageously expensive, primarily for luxury, then they qualify for the program.
Awesome, very cool. So where's a good place for entrepreneurs? Is there a way for them to kind of start to assess and analyze that kind of equity lens? Because the rest of that, that all makes sense. I think one of the things that a lot of founders don't run into a lot in terms of capital raising in particular is like the equity aspect of it. And that's not to say that there aren't a lot of good equity focused funds out there, but it's just not something that often comes up as often as you might hope. Where can folks go to kind of learn? I think the rest of it is pretty self-explanatory and straightforward, like greenhouse gas reductions and having an actual technology and being in the position to get a loan. But the last bit, where can folks go to kind of learn about how to think about that? Any thoughts on?
Yeah, and I think we're still learning ourselves too. We haven't developed, we want to develop a tool that could be public, but so far we haven't gotten there. What we do with every application is we ask for zip codes of the deployments, and then we run it against the Justice 40 community, calling virus screen, and we run it against CRA, which is Community Reinvestment Act, which our lenders use and get kind of graded by the regulator when they check them, whether they've been doing the providing the loans to the communities that need it the most. So we kind of assess each zip code against, and there is no right or wrong answer right now. And I don't think we're really gonna get that straight, that we'll be like, oh, you don't fit, because it really depends on the business. Like if you B2B, we can't really dictate like who you're gonna sell and who your customer should be. So I think it is just, maybe I say common sense, maybe it is not common sense for everyone, but just trying to have communities in mind. Would your neighbor ever be able to benefit from it? Like, would your kids in 20 years think that this was a good technology and something that improved their lives? And yes, there is some businesses that it applies and that's the core of their business, and some where it's not directly applied. But I think just having right now we ask questions in our social equity review, but there is again no right or wrong answer. Some are better than others, but we don't have a grading system where we say, oh, you received 0 on your social equity.
Right.
Yeah, I know some other programs, government programs, are a bit more straightforward that way, but that is part of the funding requirement where we don't have that. So
Awesome. No, I appreciate that. I think there's a couple questions. I just want to remind those who are listening in, please do feel free to drop your questions in the Q&A. We'll tackle some of those really in the next few minutes here. So do feel free to shoot any questions our way. I want to talk a little bit, we've kind of covered what y'all do and what the product is and who it's for, and a little bit of the evaluation criteria. What's the best way for folks to, start to engage with your program? Should they be reaching out to you? Should they go to the website and fill out a form? How do you all work with and manage that the relationship with folks who are looking for the loan guarantees?
yeah, I think the easiest way is go on our website, and we have a get a quote link. You won't get an exact quote. We won't give you an interest rate because it's not up to us, unfortunately. But we will get an email instantly, and then we will follow up within a few days to schedule an intro call. People can reach out on LinkedIn. They can send us emails. Some come from IBank's network, but I think through our website is the most straightforward. And then we have an intake call, and if most of the time, companies that already submit a quote are in the climate space. I don't think anyone's trying to convince us or try to fit in if they don't. So, but yeah, there is some, as I mentioned, requirement being in California. Some companies are outside and are looking for working capital. And that working capital needs to just be for California deployments. So sometimes some companies might not qualify for that, or at least currently they might have it in the business in the future. But yeah, through the website is the easiest, and we should be talking soon.
Awesome. I love it. And we'll definitely get all that contact info out in the follow-up on this webinar. One of the other questions I have for you is, and I'm not sure if you can share these or not, but like, do you have any case studies of like, like some favorite companies that you funded, or just like you can share generally like where it's worked out really well to help streamline or get companies access to their loans?
Yeah, I mean, the first project was a hydrogen ferry, and that project received grant funding from CARB, and Air District administered it, and they also got a loan without a loan guarantee for the full cost. It will be operating very soon in the Bay Area. It's already in San Francisco right now, so that's been a long time coming, but we are excited. It's also, I'm realizing it's not news for many that it's so much harder to scale hard tech compared to soft. And they just have a special place in my heart because we need deploy. I mean, software is great. They could solve and optimize a lot of things, but we need hard technology to have a chance in the climate space and climate crisis. So the other one I mentioned is a microgrid provider, Gridscape. They are based in Fremont, California, and a number of the deployments have been at their fire stations. They also a good example because they received not a max loan, but they were able to renew it, and now they are having the relationship with the bank without us. And that's what we want to see and hear. Yeah, and then a lot of companies that we funded with supported with our loan guarantee have applied to recycle the loan to use it again. And that's been more recently, maybe a few years ago, they could have gone without our loan guarantee, but now lenders would prefer to de-risk as much as possible, and we are available, so why not use us again?
Awesome. No, that's incredible. And it is we talk a lot at Open Grants about the capital stack and how important it is for savvy founders to leverage all of the available ecosystem to do smart things with the money. And so it is this is a very purpose focused instrument that you have. And it is very I'd say specific. But also, it sounds like incredibly useful, and it is great to hear. I think, I've been in that position before as a founder of like, hey, I'd love to like have a relationship with this bank and get a loan, and they're like, no. You're an early stage company, you have almost no revenue history, like we don't know what's going on, and so this is a powerful tool to de-risk and move that conversation forward. So really incredible stuff that y'all are
And
doing.
my advice here is also work with smaller banks, work with your community bank, work with your local credit union, because they are in your own backyard. They are more likely to support you and take a risk, and especially with loan guarantee, where some larger banks are waiting for large return from you before they can consider giving you a loan. So that's where we've seen like the most success with lenders, because we have a cluster of some lenders who provide repeated loans for companies, and they are small to medium sized banks.
Awesome. No, that's great advice. And I think before we get into the Q&A, which we will do in a couple minutes here, my last question for you really is kind of on that front of there's a lot of things happening in the fundraising space right now, and just wanted to get your thoughts. Any other advice you have for folks on what kind of lenders they should look for? I'm not sure if there's specific names that you really like, or that you're allowed to say out there, given your position. But other thoughts on that front of just what have you seen in terms of trends of like who likes this stuff?
Yeah, and that's where we rely a lot on our finance leads. So they help us match companies. So when I mentioned that companies submit a preliminary financial assessment to us, I don't really look at it. It's our finance leads who look and assess and be like, okay, given what you provided, this is the reasonable ask. Because again, everyone who apply, when I receive the quotes, they want 5 million. Everyone want the max. And when we get to the detail, we're like, well, I mean, yeah, I bet 5 million would be nice, but what do you really need operationally? Like, is a million a more reasonable ask that the lender is more likely to land on it? And our finance leads also kind of pitch various companies to their network of lenders when they talk with them weekly, because some work more in like ag space, for example, farmers and merchants. But they also been involved in like EV space and EV charging. So I think it varies, and we try not to. We had a webinar with lenders, and then the 2 lenders that attended were just got lots of calls, and they said they didn't mind, but we try to be more mindful with introductions. So we prefer to talk with funders and CFOs before they talk to lenders, so we can make sure that everyone have the right intent, and we use everyone's time appropriately. So yeah, and I think like piece of advice, like provide everything you have in your financial track records, like try not to hide anything, even if you had losses, like that's fine. That's what startups have. Like that's the definition of startup. I asked the lender, like, how do you define startups? And he said, those have not generating revenue. Oh, okay. Like, so just be honest, like, because it's a lot of human relationship. Like when you're trying to portray your business, like not necessarily be super pessimistic, like, oh, I've been losing in the last 3 years, but be like, yeah, the economy in the last 3 years hasn't been the best, therefore we haven't been, but show the clear path to profitability. Like how can you gain from it? Like how can you show that you are profitable? What are you trying to do? Who are your contracts with? I always, and I think you've also been saying this, work with your local governments, like reach out to them, let them know that this technology exists and it could help them implement this rule, and they might have some funding that could help you be more appealing on a paper for lenders. So yeah, there is no like magic wand that could just make it all happen. I wish there was, but it's hard work, and I think some don't realize how hard it is to get a loan. But once you are on a completely different trajectory. Like,
Yeah, no, I think that's great advice, and honestly, that's we try to communicate that around grants as well. As it just is, it's a lot of relationship building here in this space, and I think sometimes that's hard for, we've become very accustomed to like DoorDash and this like sort of consumer experience where it's like click buttons, get the thing you want,
yeah,
and that's just it is simply not the reality of fundraising in any sense, like venture debt, loan guarantees, any of
yeah.
that. So let's get into some of the questions here from the folks who are on the line and listening. There's I'll answer that one. But so just to like pile onto this, are there financial institutions that you think are easiest to work with for startup companies? Sounds like you have some analysts who kind of help make those matchmaking, but maybe you could double click on that process, because I think it might be helpful for companies to understand, like, should they go out and do their own diligence? Is that something that y'all can help them with? If they come to get a loan guarantee, can you match them to certain institutions?
Mhm.
Would love to get into that a bit.
Yeah, I mean, I recommend to do both. Like, you have to be your own advocate. We try to do our best. Our finance leads, we have 2 of them, and they try to help as many as possible. And I would say it's good to have a preliminary financial assessment because both of them have been bankers before. So they will look at the numbers as a bank. And in some instances, they provided some feedback like, it would be good if this number got here. Then you, I mean, it always would be good. But then if some companies have some runway before they actually could receive the loan, they have some time. So that's why I say we talk with everyone. Maybe someone in pre-seed stage is a bit too early because they don't quite have all the track records to assess on. But even for them, it's helpful to understand, oh, what do I need in order to get a loan? Because it's quite different than getting VC money, right? So you need to be in that mentality that in 3 to 5 years, I'm looking for a loan. Therefore, that I am preparing my financial documents in that manner. So it looks more appealing. And but once that assess, like once we have a discussion with our finance lead and we provide the letter, we've seen both. We've seen some being pretty active, sharing the letter, saying, hey, look, especially right now, I'm approved for this government program up to 80% of the loan guarantee. And banks, we just had a call this morning with a pretty large bank interested in one of the clients brought them the letter. So we like both. We recommend do your own diligence and like do your own networking and outreach. And we in IBank always happy to talk more on the with lender, like what does it really means for them? Because at the end of the day, if the company defaults, company default, it's the bank who will be liable for less because the IBank will provide the loan guarantee. But yeah, sorry, I'm like mumbling.
No,
but
it's all good. I think so. It sounds like, there's support from your side. People should definitely be their own advocates. It also, one of the things that I picked out of what you were saying is just that, there's banks and lenders who might not be so familiar with this, and they might need some more support. But overall, I think you had mentioned earlier also working with community banks and other groups that might be a little more flexible. And I can, I'll double down on that note. It's just that when you're building these personal relationships, it really can be pretty effective to work with folks who have some additional investment in like the community where you're working. So yeah, no, that's great advice. Yeah, I think this whole space, people always want like these kind of easier answers, and unfortunately often the real answer here is like, this is really hard. And just be prepared to have lots of conversations. Fundraising is just not fun. So more of a technology focused question. What TRL level, what technology readiness level does the technology need to be before they engage with you typically?
Yeah, so technology needs to be past the demonstration phase. And this is for us to be able to assess that indeed it reduces greenhouse gas emissions. Like we've seen it in I mean, again, we could go and see it, but there is no need nowadays with Zoom and everything. But it's also for the bank to be able to loan. They want to know that it's not like you had maybe built one prototype, but now, and it's been successful, you operated for a number of months or years, and now you're ready to scale. You have contracts in place for, let's say, this 100 units. And ideally, if there is prepayment on those contracts, it's even better. But yeah, that's pretty much answers the question. Like we need to see past the demo.
Yeah, beautiful. Great question here, because I think, and this dovetails nicely with what you're just talking about. So Green Driving America is a nonprofit that advocates and educates on clean transportation and transportation efficiency. One of their initiatives is conducting funded, measured, idle-free campaigns at schools, including in the Bay Area. This is not a tech solution, but a behavioral one. but would climate tech would y'all fund those kinds of campaigns with the loan guarantee program?
Yeah, we can support nonprofits, and that is based on IBanks. So we still follow IBanks requirement for the loan guarantee. So it needs to be a small business. It can be a nonprofit. In terms of greenhouse gas reductions, we look at both direct and indirect. Like EV charger by itself don't reduce any greenhouse gas emissions. It's those EVs that charge and drive. So yeah, I would say we open for discussion, and yeah, all this. I mean, especially like as I mentioned on the social equity, this has a clear impact for our communities. So even though I didn't say we have like a heavy, we don't score anyone, but we can justify it as long as greenhouse gas indirectly get reduced, and it helps local communities. I would say it fits.
Awesome, great.
And I also know I really don't understand why people idle. Like that's just personal. I always want, because I know a district does have like, I think you can call a complaint line if like someone's not turning off their vehicle outside of your house or something, but it is something I don't ever understand.
It's wild. Another great question here. Do the loan guarantees go toward project development only, or can it go for other uses like a particular phase of R&D, which will lead to financing?
So would it be an R&D? Would it be the loan for R&D? Is that kind of the question, I guess?
I'm not sure. And you know, if you're the individual who posted this, yes, this individual says yes, it would be for R&D.
Yeah, so I would say that would depends on the lender. I haven't really seen a loan given on R&D unless, let's say, you have already a line of products that are generating revenue, and you are getting working capital that you could deploy for R&D for, let's say, third line of a project of a product. Then it could qualify, I would say. But if it's just the first R&D of that, I don't think the lenders would get behind, because as I said, they need to see the project operating and be ready. And also we try to make sure that the companies that we support can scale relatively soon. So we see this technology being deployed sooner than later, because there is a lot of great technology that's still 20, 30 years down the road, and we haven't supported those, not because the timeline is so long, but it's just hard to find a lender, and they still in the early stages.
Awesome, very cool. So, and feel free, folks, to throw any other questions our way. One of the questions I had for you, you had mentioned earlier, you know, that there was an org that had used the loan guarantee program alongside a grant. Do you see companies using this as a means of like securing loans as part of kind of matching funds for grant programs? Does that come up ever? I'm just curious myself about, you know, the different ways you see this implemented. We've talked a lot about just kind of like product and deployment, but would love to get your thoughts on, you know, what the rest of the capital stack is looking like for a lot of these projects.
Yeah, I mean, we always encourage looking for grant funding. I think I even used your platform for a few, just when I write recommendation. I'm like, consider this grants, because they would help either bring the cost of the product down the road, because that's a few times have come up in our approval when it's pretty pricey at the current stage. But we encourage, but I think that is the only company that like clearly they got a grant, they got a loan, they build the product. most of the time we've seen is they've got grants and now they're looking for loans.
Mhm.
I mean, with IRA right now, there is a lot more funding. So we encourage everyone to keep an eye to try to apply. And then the more money you have, the more likely loan you're gonna get a loan. And just using every possible, especially like I mean, sometimes we recommend that companies they need to raise a few like another round, but that's just primarily when they are in the pre-seed stage. Like we haven't, it will be very hard to almost impossible to get a loan.
Yeah, awesome. No, this is great context. So I think one of the things that is really compelling about what y'all are doing is the unlocking that loan product for startups. But I'd love to hear, and I'm curious myself once again, does this program dovetail with other like AQMD programs? I know that y'all have your own grant programs, you have other initiatives that you're working on. Do folks are they using this to build larger relationships with the AQMD, and are there opportunities to kind of partner with the larger org here and continue to do work and deploy solutions?
Yeah, I mean, this is my dream come true if we could make that happen where most of the time the timelines don't quite align when company applying for a grant or the grant funding is restricted in particular way. But it is possible. Like, I mean, I'm always happy to introduce the companies across the air district to whatever groups are working on. We hope to, or like the air district itself is over 400 people, engineers, meteorologists, inspectors, all across the board. So we try to be as connected as possible, but sometimes in our daily lives, we just focus on our project that we work on. I really see the goal of this program is just also show the air district what technology is currently available and ready to be supported and deployed. So like I don't know, unfortunately that's like the Switch Maritime, the hydrogen ferry is the only success that we've had so far with like matching funds even within the air district. But yeah, I mean that's like my advice is always reach out to your local governments. Like I believe you said it, like when you apply for grant funding, talk to those grant writers, like introduce your solution. Same here, if you know that your solution will help particular rule implementation, reach out to those, because you could find like, yes, government employee is not the most maybe transparent in terms of like who works on what program, but it's possible to find, and it's all public records from the board meetings and stuff. So finding who is working on it and sharing your solution, I think, is always helpful, because also like it's helpful both ways. You could also receive the feedback like, oh, this is how this doesn't apply, let's say, and then you could maybe tweak something. So
Awesome. No, that's great advice. And yeah, I mean, I say this all the time, like, please reach out, connect with folks, because they're always looking for solutions, and building those relationships will be really, really important and useful for you. There's another quick question here. Does the Air District also fund projects for zero waste?
I will need to check on those. Not that I think, but there might be some, and that's also the thing. Like sometimes I'm not saying we're the last one to find, but in terms of climate tech finance, it could qualify like if that zero waste. It will need to know what kind of zero waste project it is. If it's eliminating it going to a landfill, therefore emitting less greenhouse gas emissions, that could qualify. And we try to be as broad as possible. Like we just funded a company that provides resurfacing of the roads. Instead of ripping off the old asphalt and repaving the whole asphalt, they seal the cracks and prolong the life by 7 years. And when I talked to the company, they're like, we're not climate tech, we're not startup. And I'm like, you don't have to be a startup. And they were like, well, are we in climate tech? And then they're like, yeah, we reduce greenhouse gas emissions. So I think it's also like a buzzword where a lot of organizations and companies who might not think they are in the space actually are doing meaningful work to reduce greenhouse gas emissions. So even that zero waste project could qualify for climate tech finance potentially, but I will need to check if there is any on the within other divisions of the district.
Awesome. Thank you so much. And we can send that out in the follow-up. So we are drawing to a close here. If you do have any last questions, feel free to throw them in the Q&A. But I just wanted to say thank you for joining us today on the webinar and talking about this really cool loan guarantee program in climate tech finance. And yeah, I think, you know, as we close, I always give this opportunity, and I forgot to tell you about it, but any like, you know, what if no one takes anything else away from today, what's kind of your call to action for folks who are listening in and might be interested in this space?
I would say trust your government, like I guess work with your local government, have some trust in them, and spend some time to educate them. And it should, like, if government continue doing their own thing and companies continue doing their own thing, I don't think we ever gonna get to solving climate change. So we need to all work together, and keeping communities in mind is key. Like if the government only tries to this current Justice 40 initiative only tries to address, and I've heard about Justice 40, it's not just Justice 40, it's Justice 40 and above. That's the goal. The goal is to get to 100%. So yeah, I would encourage, I know everyone's very busy and have limited time to do a lot of things. I get it, but setting some time aside and building those human relationship is key, because it's going to pay at the end.
Awesome. No, I 100% agree. It's one of the reasons we built Open Grants in the first place, is we said, look, this is one way that people can partner and work with the government, and it really can be a very powerful relationship that can accomplish a lot. And government has these deep pockets. They have dilutive funding, they have debt, they have all this capital, all these resources, they have expertise, all this stuff. And it's been, you know, sometimes a little fraught trying to make it happen. But once you kind of figure out, you know, the realities of what's going on and break through, it is really powerful and a really cool opportunity, and something that, you know, really savvy businesses are taking advantage of. And we're hoping to see a lot more of that. So really appreciate that call to action. Appreciate all of y'all who have jumped on the webinar and came out. Appreciate that. And we will be sending a follow-up with contact information and other calls to action. So we'll let you get back a few minutes of your day. And thank you, Tamara, for jumping on and joining us today. And we'll be in touch.
Yeah, sounds great. Thank you, everyone.
Thanks, y'all.